Alright, so we're going to take a look at problem 5-6 from chapter 5. 5-6 is dealing with the completed contract method, which is different than the percent of completion method. Now, under the completed contract method, for this problem, we're going to look at all the same information that we did from problem 5-5. So the first requirement is to calculate the amount of gross profit to be recognized in each of the 3 years. So we have to figure that out, and we'll look at 2013, 2014, and 2015. And we're trying to figure out the gross profit recognized. Now, under the completed contract method, you cannot recognize any gross profit until you've actually completed the contract. So you wouldn't recognize any gross profit in 2013, you wouldn't recognize any gross profit in 2014, and you'd recognize all of your gross profit in 2015. And this is your total gross profit. And just to clarify where the 1.8 million came from, we had a $10 million contract. The contract was $10 million. And then the costs incurred during each of the years. In 2013, $10 million. In 2013, it was $2.4 million. In 2014, it was $3.6 million. And then in 2015, it was $2.2 million. All of these you subtract, obviously, from the 10 million, and this gets you to the 1.8 million. You can see that there. So this is requirement number 1, to show what you recognize for gross profit through the year. Okay? Now we're going to take a look at requirement 2, which is asking us to prepare all of the necessary journal entries for each of the years. So, again, we'll look at 2013, 2014, and 2015. So we're going to book the same types of entries that we booked looking at the percent of completion contract. So first, the first part of the entry, say A, the first entry, is to debit the construction and process and to credit the various accounts that we say are whatever is being credited. So if they're using steel or wood or whatever the resource is that's being used that they currently had in their inventory, you're going to reduce that. And in this case, we're just reducing it using these various accounts. But there would be true accounts that you would be crediting to. And it goes into this construction and process account. So where does this amount come from? It's the cost incurred during the year. So in 2013, they incurred the 2.4. I'm just going to abbreviate here. 2.4. So you can see this. This is given to you right in the problem, 5-5, cost incurred during the year. 2.4 million in 2014. It was 3.6 million. And in 2015, it was 2.2 million. So that's your first entry. Debit, construction, and process, credit the various accounts. B for the next entry. The next entry, we're going to record the progress billings. All right, so again, entry A is to record the construction costs. Now we're moving on to entry B to book the progress billings. So the accounts that you're going to hit are accounts receivable. So you're increasing your receivable because this is a billing. And then it's this new account billing on construction contracts. And these amounts you're going to take right from the billings during the year that's given to you. So you're going to have 2 million, 2 million, what did they give us? 4 million, 4 million, and then 4 million, 4 million. So this information comes right from the billings during the year. Then, in entry C, you have to book the cash collections. So you're going to debit the cash that's actually collected and credit the accounts receivable like you normally would with an accounts receivable entry. Now this is coming from the cash collected during the year. So again, all of this information is given to you right in problem 5-5, and even though we're solving for 5-6. So we have, let's see, 2013, 1.8 million was collected. And then in 2014, 3.6 million. And then in 2015, 4.6 million was collected. Now we have the entry to record the gross profit. So when we're looking at this entry, we'll call it D. We have to record the gross profit. Now, under the completed contract method, we are not going to worry about recording gross profit until we hit year 2015. So we have the similar entries like we did for the percent of completion, where we had construction in process, cost of construction, and revenue. But we're not going to book anything in 2013 and not anything in 2014. We're going to book everything in 2015. So we've got the construction in process and the full 1.8 million, because this is our gross profit. Then we've got the total cost incurred of 8.2 million, and then we're going to book all of the revenue of 10 million in 2015. So when you're looking at this gross profit under completed contract, A, B, C entries are exactly the same under completed contract or percent of completion method. However, when we get to the final entry, actually recording the gross profit, nothing is recorded until fiscal year 15. Now, requirement 3 is asking us to prepare a partial balance sheet. So we're going to look at this for 2013 and for 2014. So we have our balance sheet under our current assets. You have your accounts receivable, so that is what it is. This 200,000 is taking the amount that was billed during the year of 2 million minus the cash that was collected of 1.8 million. And then in 2014, we're going to record 600,000, which is taking the amount billed of 4 million by the amount that was collected of 3.6, so that's 400,000 plus the amount from the previous year of 200,000. Now we're still going to record our construction in process, which is the cost incurred during the year. So we had 2 million cost incurred during 2013. Then we had 3.6 million incurred during 2014, but you have to add 2013, so the 2.4 plus the 3.6 will get us to 6 million. And then we're going to subtract out the billings. So the billings we know were 2 million in 2014, and then 6 million total in 2016. And actually, I'm sorry, I made a mistake from 2014. The cost incurred was 2.4 million, not just 2 million. So again, the cost incurred during the year for 2013 was 2.4, and then the 6 million in 2014 is the 3.6 million of the cost incurred during the year plus the 2.4 from 2013. So then we get our totals, cost in excess of billing. So here we have 400,000. Here we have nothing. So this is what your balance sheet would look like. Now when we look at requirement 4, it's asking us to record the gross profit. For this one, again, you're not concerned about the percent of completion, so you're taking 2013, 2014, 2015, and in 2013, you're not going to record any gross profit. In 2014, you're not recording any gross profit, and in 2015, you're going to record all 600,000 of gross profit for total gross profit. And remember, this is based on taking cost incurred during the year. So it was 2.4 plus 3.8 plus 3.2. Let's see what that adds up to. 2.4 we have 9.4. And the contract was 10. So we get our 600,000, which clearly agrees to how much we're recording as gross profit. And then finally we have requirement number 5. So requirement number 5, I'm going to set up with all the components so you can see. So you have 2013, 2014, 2015, and you've got cost incurred. So this is all given to you. 2.4, 3.8, and 3.9. And then you have the estimated cost to complete. and that's 5.6 and 4.1. Now, remember, we're dealing with a $10 million contract. So in 2013, the costs to complete are going to be the 2.4 plus the 5.6 equal cost of 8. So you know you're still going to make $2 million in 2013. But now, in 2014, you've had costs of 2.4, 3.8, and you expect 4.1 of costs. So when you take all of those, we have 10,000,003 of cost, but our contract's only 10 million. So we're in a loss position of 300,000. So when we're looking at how much gross profit to recognize, we have 2013, 2014, 2015 under the gross profit method under completed contract. We're still not worried about 2013, but GAAP says you have to record a loss when known. So we're going to have to record this $300,000 loss in 2014. So that would get booked to the income statement. And then 2015 comes along and the expenses were actually 3.9. So we take the 2.4 from 2013 plus 3.8 plus the 3.9. So expenses actually came to 10.1 million. $10 million contract. So there's a loss of 100,000. Now we've already booked a loss of 300,000. The total loss needs to be 100,000. So we actually have to replenish 200,000 here to show a total loss of 100,000, which we show here. All right, so that's the completed contract method. Thank you for listening.